All right, hello everyone, and welcome back to the daily update of my 1000 day challenge. This is day 23. So let's get started. As you know, today is Sunday. So basically, I'm just going to do a very quick update in terms of Bitcoin because the other market is it's not moving in that sense. So, all right, so for Bitcoin itself, it retains to have the bearish market structure. As you can see, a high, a lower high, a low, and a lower low. And the reason why I don't take this as a lower high is because today has yet to close. So this means that today it actually bounces up where it potentially could break to form a higher high in that sense. So until then, I wouldn't consider this as a lower high form. Until this closes lower, then this will be the new or the latest lower high per se. But bear in mind, you still get this high, a lower high, a low, and a lower low. So, okay. So over here, as you can see, I already updated the market structure and the trend. So overall, it's still the same as yesterday for the daily chart. On the 4-hour chart, you do see a transition from neutral back to bullish market structure. So later you'll take a look and understand why I'm looking for this potential trade setup. So over here, like what I mentioned yesterday, since it didn't break above the 20 exponential moving average on the 4-hour chart, it leans towards further bearish momentum. But would I short? The answer is I say no, because potentially it found support over here and then it bounces upwards. So what I'm looking for is potentially a transition from a bullish market structure whereby I get this high, a higher high, a low, and a higher low. If this forms a cell of high, a lower high, a low, and a lower low, that will form a bearish market structure, in which case I'll enter potential short and I'll look to take profit at a 1:1.5 kind of risk to reward setup. And bear in mind that because this is ultimately above the 200 simple moving average on the 4-hour chart, if I were to enter this trade successfully, I need to make sure there's a 1:1.5 risk to reward with sufficient space between my target profit and the 200 simple moving average. Reason being is, as you can see, this 200 simple moving average is sloping upwards, which is why the longer it takes for it to break down, it means that this 200 simple moving average will move upwards. And I do not want to take profit of this 1:1.5 below it, simply because it may find support over here and resulting in me not being able to take my profit before it bounces upwards. Yep, so that's the consideration behind when you go for some sort of like a counter trend kind of trading setup. So in this case, I would take full profit and not like 50%, 30% because it's counter trend. And for conservative sakes, you could also consider taking less risk, which means instead of you're taking your traditional 1R, you could be taking 0.8 to even 0.5 R. The idea intention is to be aware that when you're trading against the trend, the probability of it getting wrong is definitely higher. So for new traders out there, I wouldn't suggest you taking this trade at all because the risk to reward is not as good as it would be if you're going towards a long. In which case, I will wait for a confirmation of support over here before entering a long setup. So yep, you can read it over here. Then I'm looking for potential pullback. Basically, it's like this pullback and a bearish. This is considered this is a pullback from the downward trend. I'm looking at this as a pullback and as a break of a market structure to bearish market structure. That is where I will enter potential shorts. But I will only enter if there's a good enough risk to reward of 1:1.5 with sufficient gap over here. So yeah, that's the thought process behind it. Otherwise, I hope you guys have a great evening, great day ahead for this Sunday and this weekend. And I'll see you guys tomorrow. Take care. Bye-bye.